Can everybody hear me loud and clear? There might be a slight delay, there might be a 2 minutes delay, but I wanted to come on. Yeah, every time I try. Yeah, I can't hear. Alright, so since I've been switching to Stream Labs, every time I'm trying to come on with using the thumbnails, it looks like the thumbnails just remain the same. He doesn't plug into the thumbnail. So that is something that I'm working on. Um, but yeah, we're still live regardless. All right, how is everybody feeling this morning? How's the market doing? It's a lot of back and forth, it's a lot of up and down. So today we will go to our normal process. We'll take a look at the daily, the hourly, and actually do like a 1 minute execution. And then after that, we'll take a look at a cycle. If you stick until the end of the live stream, or probably in the middle, I'll talk about like a cycle that was invented by somebody with a brilliant mind over 100 years ago. Mm, almost 100 years ago. Kind of like predicting the markets, the boom and bust cycle of the market. So I will be sharing that with you, and then when I share that sometime in the middle of the stream, you can clearly see that a lot of boom and bust cycle, it's not coincidence, it's not natural cause, it's just induced and enhanced. Okay, so we'll take a look at that. And then yeah, we'll be here for about an hour or so, and then we'll be able to take it from there. So this is one of the console that I use to kind of like take a look at all the indexes, the VIX, and the dollar. I mean, I don't look at this every day, but this is kind of like the pulse, the health of the market. I'm trying to see, okay, if VIX has been increasing, that means there's a lot of volatility, which there has been, as you can see. The volatility for the past week or so has jumped from 15 to about 17.39 around there. So there's a lot of volatility, and it kind of shows here with Nasdaq and with the S&P 500, Nasdaq, and Dow Jones. So there's that. Let's see. Let's take a quick look at uh, the seasonal tendencies. So looking at the seasonal tendencies here, it seems like, so let me see if I can make this a little bit bigger so you can see. Yeah, so it seems like there's been a lot of drop, and this is kind of like unusual for December. Usually on December, you usually get a lot of price action. It will be like a Christmas rally, Santa Claus rally. Doesn't seem like we're going to get that this year. Again, every year or every other year is always unprecedented. There's always something new, right? That's going on. That kind of go against the trend or the normal cycle, if you like. So this is one of the point. This is one of the way at this point I say, hey, looking at the seasonal tendencies, it's not very helpful. You see there are parts, yes, it's kind of like incongruence. When it goes up as well. But there are parts you feel like it's falling apart. Or maybe this is what is this? So historically, around December 18, you get a peak and then start dropping from December all the way until December 24th. He actually died on Christmas. So there's no Christmas rally really. And right after like around December 25th, that's when it rallies a little bit. So it might come a little bit early this year. So the pick and drop may have come a little bit early. All right, let me take a look at notifications from Streamlab here to see if there's anything weird happening. Uh, Seems like there are no warnings, so it seems like we're in good shape. Alrighty, let's see. Yeah, I kind of have all kind of notifications going on, so I apologize for that. Okay, so this is the part where I say seasonal tendency is not very helpful at this point because I mean you can't predict what's going on after that. I mean it's just all over the place. All right, so I just rebooted my computer, so I kind of like make it a habit before I start the stream. I will reboot it. It kind of help a little bit, but not really. Sounds like I need a new computer. All right. We have officially transitioned into a new contract. So now we are in the March contract, and this is the 1 minute time frame. I have not adjusted all my annotation for. Um, I've not adjusted my annotation for the tweet for the March 26th contract yet. So, but what I mean by annotation, I'm talking about those bars and I'm talking about those different levels. So they have shifted a little bit. So I have not made the adjustment for that yet. I mean, I should be technically be trading the old contract, but it's the volume is so low and so pause. So I figured not to use that. I'll just transfer over to the new contract. All right, so I'm trying to see if there's an opportunity here for me to make a quick execution to go long. It's been kind of a suspect here because let's see. Yeah, it seems like it's been. I mean, it's been going up. Let's see if I take a look at it. It seems like I'm looking at under the screen here. Let me zoom out. Uh, it seems like for the Asian session, it kind of picked around 11 p.m. last night and then dropped and then traded into well, kind of the Asian kind of traded into itself a little bit, kind of like a market maker buy and sell model here. And during London, it went up and peak. Okay, yeah, I'm losing control of that mouse. And it seems like right at around 8:30 or so, maybe a little bit, well, a little bit before that, it kind of dropped below these lows here and then rally up and to go much lower. Okay, and it seems like there's a lot more room to go much lower. So let's go into the daily time frame to figure out okay where exactly this thing is planning on going. So I'm trying to. It's acting very slow on my end. So this is the daily here. Taking a look at the daily. If I'm anticipating, so we're talking about half of that wick here. See, this is what I'm talking about. Like this line here is throwing me. It's throwing me off. That's why I was looking at it. I'm like, man, what is this line about? Maybe it's on the weekly. Yeah, I was staring at it for like maybe what feels like a good minute. I was trying to make sense out of it. See, that's what I was talking about. Everything kind of shifted a little bit. Let me see if I can just clear everything out, or maybe I can just move stuff around. Uh, yeah, because other than that, it's really gonna mess me up. But don't be surprised. It might respect this level still. I mean, just because we have a new contract doesn't mean it will not refer to those existing gaps. I mean, I've seen it in the past where it actually respect an existing gap before. So this is not far fetched. So I'm aiming here for the middle of this candle here for 1120. So let me take a fib, take a half of it, and I'm just gonna draw a line. And then if he has not reached the middle of that candle or the body, then I will go ahead and take a short to go much lower. So we got the 50% of that candle is around 20, 24,807. So I'm just gonna take an horizontal line. Drop here and try to see if at least if it will try to get there. Okay. Daily 1120. Yeah, so you have to make those annotation, and because it's moving so slow, it seems like it's moving forever. So yeah, it's really moving slow on my end here. Okay, let's have that. And from this point forward, I'm gonna attempt to make a short. Do I make a short from just anywhere? No, I will show exactly where to take a short from. And then the next one, I should have dropped to like a 1 hour, but I'm just gonna go straight to the 15 and see what we can get. So, taking a look at this, you might look at it and say, yeah, there's no way it's gonna drop. It's gonna drop to 24,810. Yeah, I kind of like said the same thing earlier this morning. When I like woke up around 7, I think it was around 7. Yeah, like around 7, 8, like around that area. Oh, man, let me zoom in. Oof. You know what? I'm just gonna not moving around so much. So when around 8 a.m., I said, yeah, there's no way it's gonna drop into this gap here. On the 1 minute chart, there's a gap here. This is the first gap that opened around midnight. This is a secret and hint nudge nudge. Whenever a price open up at midnight, you wanna make sure you notate the open level on that candle, and also you wanna make sure you take note of that first gap that was formed right after midnight. And I was looking at it like around 8 a.m., like around 8 a.m., and I'm like, I wonder if it's gonna drop into that gap, that yellow gap right there. And Lord's behold, it did drop like around 9:30. Like I've always said, stranger things have always happened. So what do we do from here? Now take a look at this pricing here, okay? And then you're saying, okay, what is the right level to take a short from? So if I were to take a short, I would take a short from this level here, 25,069. So I'm just gonna draw a line here on the 15 minutes. Can I steal one of those lines? Yeah, let me steal one of those. Yeah, just wow, this one right here, and put it right on top. And I'm gonna do another one. I'm just gonna copy this one, and I'm gonna paste it right there in the middle of this 15 minutes candle. And then I'm just gonna not make it a solid line. I'm just gonna make it a dash. Okay. And then I'm gonna drop to a 5 minute to see if we see anything special on the 5 minutes level. And already you can see, uh, yeah, it's been a couple things going on here. So and that 15 minutes candle that went up like this, so we're talking about around this time it kind of trade up into it a little bit and then fall off, and then that 15 minutes candle trade in the middle of it, and then now it's falling apart right now. So what I would do, I'm gonna sit and wait to see if this is gonna retrace higher or if it's gonna keep plunging lower. Now I know the target is, for me, in my mind I have the target of 24, yeah, 24 810. But the thing is, sometimes when you know the target and prices start going lower like this, it usually do the spikes, and then it kind of like spiked up real quick, and then it like it would trace really high against you. And this is one of those things that always plague me. I mean, it's still plaguing me a little bit, but not as much the way it used to. Like when it's dropping like this, I have zero incentive to go short. Like I want to wait until it get there to either 25.45 or to 25.67. And quite frankly, to be honest with you, if price which is higher than this relative equal highs here, it's gonna be problematic. It'll probably be trying to go higher. So this is one of those conundrum. Like if it trades significantly higher than these, then there's a high probability it's going to reverse or retrace a lot higher against your stops. Okay. Yeah. Anybody on the live stream, please give me a thumbs up. Let me know if you like what you're seeing, or if you'd like to see more, or where that come from. Okay. Oh, I'm getting warnings now. Yeah. So because we're getting closer to lunchtime and it is after London close, So I don't want to engage the market yet because it may decide to retrace a lot higher at this point. I want to see how it's going to behave for 1 year, and certainly above this level here. So this is the 50-minute candle that you saw earlier, and it's literally one, two, three candles, three 5 minutes candles, and then it went up, and then I just put like a line above it, line of separation, pretty much. Yeah, it's been going low and lower and lower. So I don't know. I'm thinking, oh, maybe it's that time to reverse. Let's see. Now you see what I'm talking about. So it looks like it's poking its head. It's poking its head up, and I want to see what all that business is about. And it's doing it very slowly. In my experience, when you see all this creeping up, it's usually not a bad sign, but it's a sign that it might be reversing. Now, especially if we start seeing the swing lows getting higher and higher, then that's a possibility that it's accumulating to go higher. But I mean, now I'm trying to wait to see if there's gonna be a swing low created. So I'm gonna identify those swing lows, and then to make a case if price is reversing. A tongue tie here. So we have this swing low here, okay, and then we have another swing low here. Even though that swing low is much lower, the recent swing low I just highlighted, even though it's much lower, but you still wanna take a look at it and see, is that the last swing low? Is it gonna make another swing low again? And by swing low, maybe you guys don't know. This is what I mean by swing low. You have a low here, okay? Then you have a lower low, and then you have a higher low. So if you think about it like a trident, this is what I'm identifying as a swing low, okay? And then it'll be the same thing here. There's like a lower swing low each time, indicating that price is going lower and lower. And also you have a lower swing high, meaning that price is going lower and lower. Yeah, this is the part um, where it requires a great deal of patience. You really have to sit around and wait because at this point, you don't know what this is going to do. Now you may say, okay, maybe I'm reacting to price. Nah, this is not reacting to price. This is just waiting and confirming um, what's going on here. That doesn't mean if you create one more swing high, I mean one like a one swing low higher and higher, that doesn't mean it's not gonna come back down. But you want to see the evidence of prices accumulating. Okay. So far, I'm not seeing that. So let me. That's on the 5 minutes. So let's take a look in the 1 minute. Maybe you'll see more evidence. See, it already defeated the purpose. So so at this point, you can say, all right, I'm gonna go for. If you have a lot of conviction that's gonna go higher, then maybe you can go for a long. But I wouldn't. It seems like it has a lot more ways to go lower. Like there's a long way to go lower down from here. I'm anticipating price to drop as 24 160. And again, if you look at every single swing high, let me see what this the swing high is. That's a swing high, and this swing high. There's no swing high here, so it's already creating a swing high to go lower. Yeah, and then also it is on lunchtime. You definitely do not want to engage in price unless you absolutely see something that's gonna be beneficial in your trade direction. Yeah. So pretty much it may go sideways here during lunchtime. Again, like I said, there was a case where you can kind of go long from here, but I mean, even if I had went long, I mean, really, like really, really, are you comfortable with the way it's moving right now? No, I'm not. So, so I have to sit on and wait. Um, so for me, this is the confirmation that I need if it's going higher. If it's going higher, I need to see it break above this high and most certainly above that high. If it needs to go higher, to me, everything is pointing going lower. But if it needs to go lower, I want it to go a little bit higher. Maybe I should have went short here. I want it to go a little bit higher for me to participate. So let's put a sell order limit here.
Order submitted.
I have a feeling the same thing that happened last week is gonna happen again. Yeah, to me, going low on this distance here is it's a little bit too much. It's a little bit too low. But again, I don't know how much consolidation is gonna do here because it's consolidating here. All right, let me take a look at different screens here and see. All right, so I think I'm just gonna let this one does its thing here, and I'm just gonna put it on the side, and I'm gonna share with you. Well, let's take a look at the economic calendar. What's so special about this week? CPI. So we have CPI coming up tomorrow at 8:30. Will the data be delayed? I don't know. Another perfect excuse to reset the financial market. Um, yeah, delay everything and then putting something new in the meantime. But it's neither here nor there. And what else we have coming up? And then we have personal income outlays and consumer sentiment, um, all at 10 a.m. on Friday. So besides tomorrow, yep, there's not much price action for this week. And I'm gonna come back to that. Let me see what's going on here. Yeah, it's quiet. Yeah. Look at that. It's funny how it works. It's just like it's been going lower and lower very aggressively, and then now it gets in the particular area. It just feels like it's going to sleep, literally falling asleep. Yeah, I'm taking it out.
Order
I
canceled.
don't like it. That's going short on the on too low. It's too low for me to go short. This is one of those things you see your stop loss get hit very quickly. Okay, so we had an original swing low here, and we have a brand new swing low. Let's see if it's gonna take out that swing low. Now, if it doesn't take out that swing low, then it might be time for it to go up. You know what?
Order
Let's
filled.
do it. Let's put it in. Because I cannot have you guys just be watching my screen and just talking. I kind of need to give you some actions. And it seems like it's picking up pretty quickly here. It's picking up some steam. I'm going to take a partial a little bit lower than that. Man, look at it. It's just like
Order
it's really
submitted.
preventing me from getting that partial. I'm going to get it right here. Come on. Oops.
Order filled.
There you go. Now that's what's up. So now that I got a partial at 30 points, I don't want to trail it because I feel like it's gonna drop really aggressively, and I made miss out on a much bigger move higher. So uh, I'm skeptical to trail, but at the same time, it may if it drop and then it drop too low, then I can get out with a partial. You know what? Too much thinking. Let's trail the stop here. Let's put it at the 10 level. Yeah, so I just put it to kind of like enough break even enough. Okay. So now you may think, man, this is hypocritical, right? I'm an hypocrite. I anticipated for price to go lower. Why did I go long here? This is the gray area in trading. This is one of those things you have an original assessment that is wrong, you can still be profitable. So remember earlier I said I put that yellow line here for price to reach the middle of that gap on the daily and the middle of that candle on the daily for November 20th. Even if I identified it here and I personally wanted to go lower, doesn't mean I cannot participate in a quick scalp to get a partial here. Because at the end of the day, do you want to be right or do you want to be profitable? You want to be profitable, right? So right now I'm in a winning position, even though my original assessment isn't correct, or because I'm modifying the plan real quick. And why did I modify it? Again, it's because let me make sure I make this a little bit wider so you can see. And that doesn't mean it's not gonna go lower because I don't understand what it's doing here. I mean, it's accumulating. I mean, I do understand what's going on. It's accumulating and it's on lunchtime. So I'm just taking a shot at it to kind of get a quick scalp. It's gonna hit my stop. I have zero doubt in my mind. The reason why I went long is because I'm looking at this swing low
Stop
here.
filled.
There you go, it hit the stop. And then it created a new swing low. And this one did not take out that brand new swing low that was created. And then I said, you know what? Let me use this line right here to go long. And I ended up going long from here. I got a partial here, and I threw my stop loss to here. Okay. As sometimes this is all you can get. Yeah, this is all you can get, and you just take it for what it comes. Do not overstay your stay. Do not prolong your stay. Just take what you can get and get out. And I knew it was going to do this. I knew it was going to kind of like go up and very lethargically, and then kind of drop back down into my stop loss. So which is why I kind of like trail it up a little bit. Now, I'm not gonna take the chance to take another trade again because it's too lethargic, and it's showing me all the signs that it's accumulating. Again, I'm looking at this swing low here. This is not a swing low because there's a higher low here and a lower low, which that lower low created a new swing low. This one is a higher low. This is a higher low on the left and on the right, and then it create another swing low again. Okay, and then which is a lower swing low rather than a higher swing low. So what I'm looking for is the evidence for a higher swing low from here. Okay, so now this is a 5 minute. Okay, if the next 5 minute candle, if I can get higher and a higher low candle, which is going to create a higher swing low, that would be great for me. Now, do you see the steps into getting into like a long situation? Now, I'm hoping that it doesn't violate this low here. If it violates this low here, then it's gonna create another brand new swing low. This is all this accumulation going on. And yeah, if you're not patient, if you're not looking at it from the right lenses, you can get really frustrated very quickly. And to me, the reason why I'm leaning on this is because I've lost I've lost a lot doing these. I've like this is to me when I first started doing this, this area right here is this area I usually lose the most. I lost the most money in this area right there. It's just I don't know what's going on. I did not know what's going on. It felt like I'm getting chopped. It feels like you go into a blade and then it's chopping you up like a chef. It's chopping the salad lettuce. So kind of like this is what it was feeling like to me until I said, you know what happened here? I think I moved this one by accident. I said, you know what? Let me find a logic here that's going to help me navigate and decipher through this. Okay, and obviously with the help of other mentors, I was able to come up with a language that's going to help me assess. Okay, with a little bit of patience, with a little bit of management, price management, or you can say contract management, risk management. With a little bit of that, what can I do when I get into this area? Get into this area, especially if it's around lunchtime, is to stand still and do nothing. Which here I violated my own rule here. Alright, so seems like we do have some people in the chat here. I'm gonna share the first secret here. It's not actually a secret, but it's something you probably did not know. But if you know, you probably didn't know how to use. So we're talking about the Banner cycle. So there are many cycles. I mean, even within the charts here, there's a cycle that I follow. So which is why I mentioned lunchtime, London close. To me, all these things represent cycles. The beginning, the end of one cycle, and the beginning of another. So this one right here is the Banner cycle. It's been around for a long time, and this is an article written about it. Yeah. Oh my goodness. 1870. Oh my lord. It was proposed in 1875. Yo, that's over 100 years ago. And pretty much, this is something he handwritten. he read it by hand. Um, this is like using graph and papers, like not even regular graph. Like talking about rulers and pen, and then literally kind of like mapping out what's been going on here. And this article, you did a very good breakdown on what that is. Okay, so kind of like give you the graphic representation by years, and then it kind of like gives you the overall cycle here. And they actually highlighted 2026, the year you can make money. Okay, so everybody remember the Great Depression in 1929. So if you take a look at the top here, it says A, years in which panics have occurred and will occur again. Oh, you telling me? And then B, that part right here is years of good times, high prices, and time to sell stocks. Is this why you have Warren Buffett sitting on a pile of cash and waiting? Inquire mind wonders. And then you have C, you have hard time, low prices, and good time to buy stocks. Okay, so 1929, what does that fall into? So that fall around like 1927. This is where there was a lot of panic. So yeah, you can look at it and say, hey, if this thing has been 2 years, 2 years too early. Listen, this is just a zone. It's not perfect science. But imagine you had access to this information, okay? And then you bought a lot of stocks like around 1924, and then you start selling like around 1927, maybe 1928, and then you have the crash of 1929. You're completely out of the market. Wouldn't you have access to that kind of information? I know I would. Now I mean, and let me see if I can zoom in a little bit closer. Ah, yes, I sure can zoom. Zoom, zoom. Okay, I think that's a lot better. It won't let me. Well, I guess no, it doesn't matter how much I zoom now. It won't matter. Okay. So we have the 1920. We have a 2026 circle, but before I get to that, let's talk about 2019. Okay. So it seems like when you're really looking at this is kind of like a couple years early. So 1927 is 2 years early, and then you have what happened in 2020 with COVID. It was a year early, which is 2019. I think you have a stock market, a stock like a flash crash in 1987. I believe there was one in 1987. But yeah, that one was like what 6 years early. Yeah, come on, man. um, and good times. So yeah, I want that time to sell your stocks in 1929. Yeah, the stocks were down at that point. Okay, so it doesn't get it 100% right, but at least if you can align yourself with this, along with let's take a look at the seasonal tendencies. You take a look at your seasonal tendencies. You take a look at the banner cycle, and then you take a look at the fundamentals, which is the economic calendar. I mean, I'm not saying you cannot lose, but you can really, really, really narrow down your risk profile and not participate in you sell off that's gonna go against you. Okay, so this is what I kind of love about the banner cycle. And then obviously there are other material that you can use that kind of break down into the years, and then where kind of it kind of lining up for you perfectly. So you have the 2000. So on the top year was the year what? Well, what did they say? Was the year the panic to sell? So imagine in 1999 you sell. Okay, and then you have the top market peaking, which is what the dot-com bubble, right on there. If you sell, but you avoid all this descent down here. Wouldn't that be nice to know? I think it would be nice to know. And in 1927, here it says it was kind of like a time to sell. I mean, I'm gonna go back to this one. This is 1927, years in which panic have occurred. So the panic happened in 1927. Good times, high prices, time to sell stock is right in the middle on 1926. Okay. Where are we with this one? So yeah, like I right on in 1926, time to sell. I mean, yeah, if you sell like right on there in the middle here, where I'm putting my where I'm putting my arrows here, it wouldn't be that bad. Instead of selling all the way at the bottom, but if you sell a little bit on the descent, it wouldn't be such a bad sell. So it's not that wrong. You know what I mean? So it's been kind of like pretty much on the spot. I mean, do you have a better process than this? Do you have a better cycle than this? I mean, if you do, please do share with me. We would like to know. So this is the banner cycle, one of the tools you can put in your repository. You can put in your toolbox. You can use. And yes, I'm gonna get to 2026. Relax, I'm gonna get there. I'm just trying to like set up the ground and the layers for you, so we can kind of like predict, like or educated guess on what's going to happen in 2026. We're gonna get there. So again, if you combine this banner cycle here, and then this is the website right here, silverfrank.com, Prophets of Wall Street cycle board. You can grab that, and then also there's that website. And I'm not selling for anything. It's just every tool and any tool you can use. You can try to make it for your benefits. And then you have wellport.com. You can have access to that and take a look at it. But yeah, so finally, let's get to 2026. All right, this is where you kind of need to put your thinking cap on. Okay, so we had in 2019 we had the 2020 pandemic, so that came in a little bit early. The next time we're going to see panic in the market is 2035. If history is correct, okay, so meaning that the 2035 might be a year or two early. So meaning the panic may happen in 2036 or 2037. I'm sorry. Does that mean there will not be any down market in between? Absolutely not. There might be a down market before, or it could be maybe in this time around. It could be that time around where it comes a little bit sooner. Maybe it might come in 2032. You never know. Um, right now, and let's take a look. Yeah, and I'm gonna keep moving back and forth in between the charts here. You know what? Let me see if I can get a cleaner version of the chart. And I'm gonna like break this down by quarter. Where did my mouse go, man? Okay, bear with me here. I'm laying down the groundwork. Okay, it's taking some time to render. When it comes to its senses, I'll get back to it. So we're circling the year 2026. It's the year. It says it's the year to make money. Um, yes, and probably no. Uh, so it all depends on when in that year you enter. So we know seasonally, if you take a look at the seasonal tendency, if you take a look at the entire graph for seasonal tendency, oh my goodness, this is so slow. We know normally you have the low happen in October seasonally. Okay, so you could see a scenario that in 2026 things start going up, and then start going lower and lower and lower and lower and lower. From spring, you kind of get some spike up, some spike down in spring, all the way until end of summer, like around August, um, July, and then maybe around October of 2026, and you can kind of see like a big rally after that. This is seasonally over the last 20 years. This is what has been happening. So you see how you kind of like narrow it down, right? So using the seasonal tendency, it seems like you can use the typical month to make your prognostication. Okay. Let's see. Maybe I'm not getting the full picture here. Okay. So I apologize for that. So this is the full picture here. So yeah, so you may start seeing price going up, and I'm gonna take that back. Everything that I say, you can see price going up, and then which is lower. Like we're talking about the red line here, and so what you may end up seeing is that right around January, you may see the market thinking um, it's gonna give you sign that it is probably high prices and time to sell your stock. You may get into that mindset, which is why when you see this, you cannot just take it at face value and say, okay, I'm gonna make a plan based on that. You gotta blend in a lot of other sources and material to make your decision, and you can see a repeat, maybe or maybe not, of what happened earlier this year in April when you see the market drop really low, and then he had a massive rally, since I would say, oh, get my, I can get my ticker to be in there, like around mid-April, like around April 8th, and then they start rallying. Okay, so we may end up seeing that. We may see a lot more highs for 2026, which is going to lead into what this says here. So if the year just started and then price start going up and then start plunging like around March, don't panic. Do not sell all your stocks yet. Okay. So years of good time, we may have a repeat of that. Me, my personal opinion, I think the years of panic is gonna come more sooner than that. We're thinking around 2032. This is when you're gonna see some kind of real panic. I think people are gonna be very cautious of the 100-year anniversary for 1929. Then in 2029, the market is gonna crash. I think they're gonna, I think they're gonna surprise us one way or the other. They may make it like a fulfilling prophecy, or they may say, you know what, this is the year we're gonna take it even higher and higher. And then in 2030 and 2032, that's when you get a crash. Okay, so it might be that particular scenario. Also, um, is it correct when you're looking at this bottom here in 2023, literally about, I'll say, a year before in 2022, that's when the Fed started to do quantitative tightening. Okay, so that's when the stock market took a nosedive. So around 2022, and they started doing quantitative tightening, and it kind of like aligned with C over here, where um, if you were able to buy any particular stocks, I would say Nvidia, Microsoft, if you bought any stocks like on 2021, 2022, right now, you enjoying your highs right now. You're enjoying your highs. So I wanted to share this uh, with you. So I think 2026. I think worst case scenario, we may see a lot of price action going sideways. Yeah, I don't anticipate there will be a lot of surprise, a lot of movement here. All right, let me take a look back into my chart. Okay, and as you can see, the price doesn't seem like it's willing to go much lower. I think it reached its terminus to turn around and reverse. and more than likely, if it's going to reverse, it's going to aim for the 10 a.m. high, which is whoa, which is looking very juicy right now. So me at this point, what I'm going to do is put a long order. Okay. Now I'm not sure if it's gonna go back down here,
Order submitted.
but if it does, tag me in, and I wanna aim for this relative equal highs over here. Okay. Now I know what you're thinking. If I had entered long here and just stay there, I would have been up by a whole lot. Yeah, you're right. So, but at the same time, if it had fallen to and fall all the way down below, you know, you could have been right, and then I would have been wrong with my trade analysis. So at this point, what I'm trying to do is try to see if it's gonna go back lower. Maybe it's clear out these lows one more time, and then create a new swing low, and then aim higher. Who knows? Okay, so I think today we cover quite a bit of stuff today. So we'll cover the 1 minute chart. We'll kind of go over into the daily and where potentially price may get into. Just because it's going to retrace higher doesn't mean the target is not this yellow line right here. To me, this is following a classic pattern of market maker sell model. So he has not reached the ultimate destination yet, and all this is just pricing to go higher, clear out this high over here, and then fall apart for the rest of the week at least. Okay. What else I need to cover here? Yep. So we did cover the banner cycle. Did we cover this one? So I will cover this one on the next live stream, which is the updated cyclical investing and trading. This is kind of like going to the Fed, when the Fed they're doing quantitative easing and quantitative tightening. It kind of like take you to the cycle of what happened, what's going on from a GDP perspective, and yeah, kind of like give you like a good cycle of fundamental analysis. I mean, it's good to have fundamental analysis to have your fundamentals, but it also you need to understand how you incorporate it with all within each other. Okay, and then you can use this one and make it your own. I mean, you can make it your own based on your own observation, based on your own experience. Um, you don't have to necessarily follow this one, but if you were to develop your own, you'll see that it will effectively follow kind of like the same pattern. Okay. What other things I could use? The fear and greed index is another one you can use. Oh yeah, the CNN one. There you go. So here's the fear and greed index. So we actually have fear right now. No kidding. So kind of always telling me like, okay, so if the market is so high, why are we in so fear? But it's been dropping, so I guess people are fearing what needs to happen next. And the fear and greed index always coincide with the high volatility into the market, which is your VIX. If I can get the cursor to get on there. So it seems like once the VIX start peaking higher and going higher, that's when you have a lot of fear into the market. Okay. Then that will do it here, folks. Thank you so much. You guys have been great. Um, be careful out there. So we do have the CPI tomorrow. I believe it's at 8:30 a.m. So don't try to get ahead of it. Uh, do not get steamrolled by the CPI. I mean, normally when the CPI comes, it's usually one-sided. You just trade one side. So if you're wrong, you're very wrong. If you're right, you're very right. Normally, but nah, we'll see what that can out. I'll be trading that after. So be careful with the CPI. Thank you, everybody. Have a good one.